Hello, Jim here. Selling options is a great way to make some extra income on a monthly basis. I had a really good month last month, one of my better months, primarily selling options, but I also did quite well with dividends and interest. I'll talk about each of those categories. I'll go over briefly my trades, which ones were the best, which ones didn't necessarily work out as well, and then what I learned along the way. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Now in June, I did 11,451. Most of that was selling premium. I did make right around 2,500 for on interest and dividends. I'll share with you the details about those. And I primarily use safe option strategies. I'll do 1 to 2 trades a day. And then I set goals. I set weekly and monthly goals. And if I reach those goals early, then I kind of lay off the pressure. I don't try to make more trades just to bring in more income. My goal, again, is 8,000 a month, 2,000 a week. And I've been able to reach that for the last 6 months or so. Now, if I continue to reach it or even do better, I may increase my goals. But right now, it seems to be working quite well. Like this month, maybe a little bit lower than June. I'm expecting probably to get right around 8,000 in just premium this month. Just because we had fewer days to trade, we had a little bit of vacation and markets closed because of the 4th of July. But what's really important to me is sticking to safe strategies. I do vertical put credit spreads. I do cash secured puts. If the long put is cheap, I always purchase it. So I rarely do cash secured puts unless the stock is really cheap. If it's a, $10, $12 stock, then I'll do a cash secured put. But again, those are the instances a lot of times that the long puts are dirt cheap, meaning you could buy a put for 3 or 4. Now, one thing I played with recently is why not buy 2 or 3? If you're paying $2 or $3 for a long put, why not buy a couple more, which will protect you even more on the downside if the market has a correction. It is nearly the end of July, and typically August and September. I believe September is the worst month in the market. August is also probably top 3 or so. So we may get a pullback in August or September. I don't know for sure. But that may not necessarily be bad for options traders. It's not as good for investors. A lot of people will stop trading for usually July, August, and September, and then come back in October. But if you're an options trader, it may be a really good time for you, especially if the market's moving around quite a bit and there's a lot of implied volatility and a lot more premium than usual. So something to keep in mind, even though a lot of people do avoid this time of year, for options traders, it can potentially be better premium and better opportunities. So just kind of keep that in mind. Now, I've always been an income investor before ever trading options, primarily through dividends. But now with interest rates higher, it's worked out pretty well to earn interest. And especially at Fidelity, I have all my retirement accounts at Fidelity. And I do probably 95% of my puts in my 2 Fidelity accounts. And I earn the 4% basic interest on that cash that I have for writing the cash secured puts or vertical put credit spreads, or even the iron condors. I did do one recently with IWM. So I do like that aspect. One thing I've noticed that my returns are a little bit lower in my brokerage because I'm not trading as many puts. So I'm beginning to start trading more in those accounts. In my 2 Fidelity accounts, I've done quite well. I've done better than the S&P. In my small account, my Roth, I've done over 21% for the previous year. I think year to date, it might be like over 16%, 18%, something along those lines. In my brokerage, I've done like 8 to 10%. I typically also do better on down markets than the S&P 500, but I am pulling out a lot of cash out of my brokerages for funding this barndominium that I'm building. So just kind of wanted to mention that. So, and that's the primary reason that I moved all my retirement accounts to Fidelity. Now, if the rates come down big time, I do think they will. It's a matter of not when, or it's a matter of when, not if. If Jerome Powell decides to lower rates, I don't think he will. I think he's going to stand strong against Trump. I could see him not lowering rates. And then when Trump does replace him, I could see rates dropping fairly radically. Now, is that what I want to see? No, not necessarily. I'd rather see small cuts, like let's do a quarter point, next week. Let's do a quarter point in August and September versus doing major cuts too quickly. People can plan better if we do it slowly at times. So in that way, I'd prefer Trump and Powell to work things out and start doing small cuts. That way we can kind of gauge how things are going with these cuts. But it is having an impact on the housing market. Car loans are still way up there. Mortgage rates are still quite high. Credit card rates are still very, very high. So I do think a cut is a good thing. And I think we're overdue. I think we should have already had at least one quarter point cut, maybe two. So for guidelines and adjustments, so I do set up guidelines when I make my trades, identify what kind of delta I want to use on ETFs, on stocks. It's also different by puts and calls, and I adjust that depending on what's going on. For instance, when I went through 22 and the market took a pretty big dive and a lot of positions were assigned, I started going with lower deltas for puts. I also started doing a lot more vertical put credit spreads to have that collar or that protection, and that seems to have worked out. Now with covered calls, I found, especially since I'm trading a lot more momentum stocks, I have Google, I have AMD, Seagate, CLS, I also traded APP. Those stocks just shoot up so quickly that you end up clipping your wings with covered calls. So I'm changing the way I do covered calls. I will not roll a covered call unless I can get like between 15 and 20% return wherever I'm rolling it. Like I today rolled AMD and I rolled it way up to over 185. I did go out a year, but I do think AMD will probably hit 175 by the end of the year. And I think by the end of next year, it's probably going to be over 200, maybe over 250. I could be completely wrong, and it doesn't mean it's going to be a straight line. We may get a pullback in September, and it may drop back into the 150s, but I think it'll have higher lows versus lower lows. So at least that's what I'm thinking. But trading or selling covered calls on these momentum plays, you either don't want to do it or you want to do what I'm calling a covered call spread. So instead of just doing a covered call, also buy a long call. You'll limit how much cash you bring in, but if the stock shoots through the roof, your missed opportunities would be a lot less. Or don't even write a covered call on certain positions. I've done what I call my filter checklist, and it's used with my covered call checklist that people in my membership can use and can determine should they do a covered call, should they do a covered call credit spread, or maybe not do a covered call at all. It helps you identify that. It looks at things like dividends. It also looks at potential growth. And it works out pretty well. And that I'm going to do that going forward, because if I hadn't clipped my wings with some of these companies, especially APP and CLS, I probably would have 5, 8, 10% higher than what I have now. But lesson learned. And as I go forward, I'm changing the way I do things to become a better investor and trader, because I do really want to own these companies. So I currently own 200 shares of Google. I plan to expand that to 400. I also own 200 shares of AMD. Same thing. I'm going to expand that to 400, probably pick up another 200. I already own 400 or 200 in NVIDIA. Again, I'll probably do that with NVIDIA too. Same thing with Microsoft or Amazon or, any of the big boys. So, and that's where I'm a little bit different than some people. I'm an investor first, then a trader. So I look at trading options as kind of the icing on the cake. It's not necessarily the big bang. Like my NVIDIA I've owned for 4 or 5 years, and I've got something like a 5,000% return. And you can't do that with just selling puts or selling calls. You can get some really good returns. And I do have some members in my membership that are getting, their accounts are growing 30, 40, 50%, actually doing better than I am in a lot of cases, but we're learning from each other. In a lot of cases, me being the teacher becomes the student and they become the teacher and I'm learning from them. I've actually taken different trades from different members, and some of the other members have also shared, used the same trades or shared their own trades. Now, I'm very risk averse, so I won't trade in Tesla. I won't trade in companies that don't make money. So I do miss some opportunities, but I stick to my guidelines. I don't change them because someone's doing a lot better than I am. I'm just happy to be doing as well as I'm doing and happy to see others doing even better and making my membership better, making my Discord better. Being that I have 10, 15, 20 chats every day about different trades people are making, and then also pretty healthy discussions about different trades. And I also have an area where people, if they're at risk of assignment, there's an area they can post that trade and we can talk about it as a group. So, and that's what I've always wanted to do. I'm not one of those, like if you're interested in my membership, details will be in the description, but you can reach out. You don't talk to someone else, you talk to me. That is, if you do the coaching. I have 2 levels of coaching. If you want to get just into Trader Club, where you can go to the meetings every other week, you can see the trades, you can interact with the community on Discord, then you can literally jump in right away. You don't have to go through a phone call or something else. And my price is $25 for Trader Club. You can join for a month, leave the next month. I have people come and go. I have people who've left and joined again. The coaching is a little bit more expensive because it's time with me. So I have an elite coaching, which is currently full, but it's 30 minutes every week, and I have 3 people I meet with currently. I do know one of them is probably going to downgrade to the less expensive coaching. So if you want to take a look, that may become available. But since it's with me and it's my time as well as your time, I do have to charge more for that. But my goal for my membership and my Discord is, again, a place where we can all learn from each other. I allow people to post other YouTube videos. I also, if there's an application or a tool that's really good, we also share that. So take a look. It may be worth your while. So plans and goals, I do firmly believe. I've had some members that really don't have goals, or they just trade to trade. So I do always encourage people, set some goals. So if you're a new trader, or you're just getting started, even if it's as simple as replacing your car payment, and maybe your car payment's $500 a month or $1,000 a month, and maybe that's your first goal. And once you reach it, go on to another goal. I started with 1,000, I went to 2,000, I went to 3,000, and so on until recently. I did go to 8,000, then I went back to 7,000, now I'm back to 8,000. So I did jump a little bit too quick. But by having those goals, you can limit your trading. I do believe that some people will trade too much. And there is a little bit of feel to gambling. So I also encourage people, if they're doing risky trades, to put that in a risky area in the membership. Because I really, to me, it's investing and trading. And you don't want to get into kind of a gambling mentality or get greedy. So identifying what you need and setting up plans. I also try to constantly improve on my trades, try to change things, try to add more checklists. I am setting up a class that'll be available to my membership down the road, but it won't, if someone outside the membership wants to pay for it, they can, but it'll be included in the membership. So I like to keep things real simple. So next, let's actually jump into the trades from last month. Again, I won't go into a ton of detail because these videos end up going on really long. So let's jump into the next section. Okay, here's my June's total worksheet. I list the trades typically by expiration, but I sorted this one by trade date. So back on the 2nd of June, I did 2 trades. One I closed, another one I rolled. I closed FCX, and then I rolled NTAP, NetApp. One of those, I made 216.64. The FCX trade, I made 173, and then also was able to close it in the same month, which was nice. Both those were covered calls. One had a 21% return, and the other one had an 8% return. Both are good companies. Both have done quite well. Then on the 3rd, I did Agilent. I did a covered call on it too and rolled it and went out. Made 228, went out another month, and it also was like an 8% return. Then American Airlines, I rolled it. It's a wheel trade that I typically do, 12 and 9, and I've had this same trade on for several months. So I rolled it again from June to July. It made another $134, which at that point was like 102% return. So it worked out well. Then I had NVIDIA position I closed, a vertical put credit spread. I believe, yeah, I paid $13 to close it. Then Intel, a covered call that I rolled, then closed and made 102 for it, like a 6% return. Then SoFi, I did start doing SoFi, but I've closed it since then. It shot through the roof, but very profitable trade. We can go out and we can see here. Actually, I think it got in a little bit of trouble and I might have closed it for a little bit of a loss. It looks like I paid 156 to bring it down. And then I did another SoFi, opened a new one. Yeah, that's what I did. So 13 and 9. This is both trades. And I made 420 on that one. And SoFi worked out well. It was 102% return. And I don't own any SoFi. All these SoFi positions closed. I was able to close them or they expired. Next, I did a Best Buy. So I rolled a covered call, 70, expiring in June, and rolled it out to September. So I went a little bit farther out with Best Buy. Made $235, which is like a 9% return. So it worked out well. And I still like Best Buy. Best Buy got hit pretty hard with fear related to the tariffs, and it's still a fairly good buy right now. Then this is Polaris. It's probably one of my roughest trades. They dropped they were like $110, $120 stock, and they've dropped all the way down into the low 30s. So I'm trying to roll them on a monthly basis and make a little bit of cash and try to lower my cost basis, which I think is right around $60 now. So made 277, or actually 287. And it's like a 4% return. So trying to clip that cost basis and try to lower it. So I do think at some point Polaris will, I believe the end of this year or early next, at some point they're going to their numbers are going to go way back up again. I believe their 26 numbers look really good. DocuSign, another one I like to trade. I did a video on them recently, a vertical put credit spread, 70, 60. And I'm looking to do another one. I want them to drop a little bit more, but I brought in 227 in premium. That was like 111% return, so it worked out pretty well. Then IWM, I closed the vertical put credit spread. I think that's just the cost for closing. Paid $22 to close it. One thing I am doing while I go through this is trying to close as many trades as I can. Every day after I make a trade or two, I check everything, see if anything is over 80% profitable. Then I did a Google roll for 170, 155. This is leftover back from April. It's really profitable now, so I'll probably close it. Google, again, had great earnings last night. So I made a little bit of premium, 142. So at one point, Google was really hammered, and I could see that happening again. You know, the U.S. government and the EU, these governments go after Google, and then Google usually drops. So I could see it. It's up, I believe, 190, 195, something like that. I could see it dropping back down to like 180 or 185 again. So NVIDIA, I've been just rolling covered calls. I've rolled NVIDIA up, I believe, this time to 150. And then since then, I've rolled it up to 160. I may roll it up to 180 here soon. But I brought in a lot of premium with them. This time I did 333, which was like an 8% return. And then XYZ, and I cannot stand that they switched their ticker to XYZ. This is Square or Block. I would have rather them use something else. XYZ is just annoying as a ticker symbol. So they had bad earnings last time and they got hammered, but they've recovered. So this position, I probably will be able to close here soon, probably later this week or early next. But I rolled it. I cleaned it up a little bit. I went from 60 to 45 to 60 to 50 and still brought in $329. And I'm at about 75% profitable. So I may end up closing it this week. Fiverr is another one that I do in my wheel. I like Fiverr. I've been selling puts on it at between 28 and 30, and I probably currently I've done enough cash secured puts that it's probably the cost basis is, if it got assigned to me, would be like 25, 24. And this was a 21 delta. This is where I closed it. I did 2 trades in Fiverr, I believe the same month. And this time I made 148. It was like a 25% return. Now we're on 610. So we're not even halfway through the month. And this time I did a vertical put credit spread on Mara. And Mara's worked out really well for me too. Even when I've been deep in the money with a 19 and 11, and I still have this trade, but it got as high as 20 recently and it dropped down the last day or two. I could see it popping back up, but I made 237 and I brought in over 1259 on this trade already. And it was like a 27% return. And then this is another one that's getting ready to probably expire. For some reason, it's really hard to close it for cheap. So it's still showing like a 50% return, but the strikes are, I believe it's right around 30. So I should be able to close it, but it made 242 on that, a really good return of 220. Another Agilent, another covered call, rolled it again. I believe brought it up from 120 to 130. And I believe they're right around 120, 122 currently, but brought in a lot of premium this time, 717, because I went pretty far out. I did 116.26. And I'll go pretty far out because I want to keep these stocks. Now, recently, I'm trying to always get between 15 and 20% return if I do roll, meaning from where it is currently, I want like a 15 to 20% higher. I don't want to just roll to the similar level and bring in more cash. I want to really pick up a lot of appreciation. Now we're back to AMD. This is a vertical call credit spread. This is the first one I did. So I did a 120, 130. And it worked out really well. Then I rolled it and with the same strikes and went out another month, brought in another $124, which was like a 5% return. Since then, I've converted it to a covered call. And just today I brought it up to as high as 185. Bluebird's another one that works really well. It's the yellow bus company and school bus company. And I've just been wheeling it month after, month to month. It stays between 40 and 45. It'll get up to 45, then it'll drop back. It did at one time get over 50, but since then it's been between 40 and 45 for the longest time. So it works out really well for wheeling. At this point, it was worth 43. I rolled it to October. They didn't have any September expirations, but brought in pretty good premium, $467. So my cost basis is really cheap with them. I have 2 contracts, so it's like $30, I believe, is what my cost basis would be. Marvel, this is another one that's worked really well. I closed this one, I believe, I paid 18. So you can see I'm cheap. I like to close these really cheap. I set up a new Apple vertical put credit spread 175, 165. Apple was 200. If I can get it down 10% to 15% lower than their current price, then I really like that kind of a trade. I brought in 241, and it was almost like an 80% return for that trade. That's assuming it closes, but I believe I've closed that one since then. I've had very few assigned to me since April. Academy Sports, now it's profitable. I believe it's up above 52.50. For the longest time, it was struggling. But I rolled it, brought in 218, another 6% return. Then Franklin Resources. This is one I've owned a long time, and you can't make much premium with it. I just seem to roll it, and it stays right around almost like Bluebird. It stays typically between 23 and 28, it seems. But I brought in 104. Not as much premium, but that's typically the case with it. Then Zoom is one of the favorites to trade, covered call, 3 of them. This was, I rolled it up a little bit. No, I kept it the same price, rolled it out to 815. So this is what I'm looking to roll again. I'll probably roll it out to, I might have already rolled it out to 919, but like some of the others, it stays in a small band. It typically stays between $70 and $80, and you can make some pretty good premium with it. So this was like a 9% return. So now we're at 617. Intel's been hammered. Another situation where I'm selling covered calls and trying to lower the cost basis. I think I've lowered it to like 42, but I made 162. I think I've made over nearly $400 since then, and slowly whittling down that cost basis. Then I did a vertical put credit spread on IWM. This one, I believe recently I closed, but it's been very profitable. My IWM trades are probably, if you're looking at success where you've never had to manage them, or I think I've only had to manage one. I've never had any of them assigned to me, and I've only managed one. So it's what I use primarily to bring in extra income. Another AMD vertical put credit spread. So I want to own more AMD, so I'm continuing to do vertical put credit spreads. This one, I think I've also recently closed. I rolled it out to 815, kept the same strikes. Actually, I went up a little bit. It went up to 110, 100 because AMD started going up big time. At this point, it was 143. And I brought in 221 in premium, which was the 80% return. But again, I took very little risk with it, an 18 delta. Then CLS, this is one that's stuck deep in the money. Here you can see it's at 152. And I keep trying to roll it. I did get it up to 135. I want to see if I can get up to 155 or 160 and brought in some pretty good premium. So my cost basis is going down. But another example, I should have done a covered call spread versus just doing a covered call. Applied material, vertical put credit spread, 145, 135. 15 delta. So this is like one of my favorite trades. Pretty deep out of the money too, because the price was 183. I believe it went up a little bit since then. I believe when I made the trade, it was more like 175. I brought in 257, pretty good return, 95% return. And I like trading applied materials. I currently don't own any. I've probably done 6 or 7 trades on them. Coca-Cola, this is, if you're been a member of mine for a while or a subscriber, I've owned Coke. My grandfather gifted me Coke when I was a teenager. I've just kept it, and it split like 6 times. So I think originally it was like 500 shares, and that 500 became 1,000. That 1,000 became 2,000. I think we had a 3-for-1 stock split. So at one point it turned in from 500 shares to like 6,000 shares or some crazy number. I'm throwing numbers out there. They're somewhat accurate, but not completely. But I did a covered call. This is a new one. I closed the previous one, and I'm going to try to do this every month, maybe every 2 to 3 weeks. I just went out to 919. So I bring in a fair amount of covered call premium, 357 in this case. So what I've found, I actually went out to 226. So I did roll it pretty far out. But I've been doing that's how I got started, was just running these covered calls on Coca-Cola. I started back probably 13, 14 years ago and have made really good money, and haven't really had that many assigned away from me. So next is Seagate, another one that shot through the roof, and I'm deep in the money. I believe that's 88.50, not 77.50. Want to make sure I don't turn the video off. But at 141, I keep trying to roll it, and this is an example of one that I did get assigned away from me. I didn't want to lock in, especially if I could not roll it. So lesson learned: the next time we have a correction, I won't be just selling covered calls on a lot of these momentum plays. I will either not sell a covered call, I'll do a covered call spread, or potentially do something else. But Seagate is one of those that just shot through the roof. It more than doubled. Next is Fiverr, another cash secured put, just rolling month to month. Brought in 241, 29% return. It's amazing how you can roll some of these names like Fiverr. It's fairly easy to roll. Next is Eat. I did a video not long ago on them. It's Chili's. It's the parent, or the parent company is Brinks. I think it's called Brinks, but they own Chili's, and I believe they own another restaurant chain too. But at 130, 120, I was able to close it. It was a very profitable trade. This time I'd spent 21 to close it. FCX, this is a mining company. I've been selling covered calls on it, and their numbers look really good. If you're looking for a mining company to trade on FCX, and they just had earnings yesterday, so potential, you have plenty of time, meaning the next time they have earnings is probably not till October. This is one that will probably expire. For, like I said, for some reason, people must be buying puts. It's currently 25.73 and 21.73. It made 293. That's 158% return. So it worked out really well. NVIDIA, this one I also closed for cheap. And AMD, I did another. This is where I switched it to a covered call. So I sold the long call and used that to create the covered call and roll it way up and still bring in some pretty good premium. I think I brought in 495. So it really brought my cost basis down. And like I said, I just today rolled it all the way up to 185. So getting that first boost by doing it as a covered call spread, and then being able to potentially sell that long call or hold on to it if it shoots up so quickly, they'd be called, the shares would be called away from you, then they'd be called back, and it could work out really well. Academy Sports, I rolled it again, covered call. 52.50, I rolled it out to 116.26, brought in $417. I'm one of those that sometimes I'd rather do fewer trades and bring in a lot more premium than trying to repeat every other week or weekly or in some cases even monthly. I really look to double my dividends, and that has worked out really, really well for so long until I started trading in more momentum companies. But with dividend payers, dividend aristocrats, it's worked out really well. And ASO is one of those kind of companies. It doesn't grow in leaps and bounds. And in Google, I did a new vertical put credit spread, 160, 150. And this one was also very profitable. 261 is what I brought in. And I closed that one just today too. So most of these trades that I did in June are closed or I've rolled them. So it's been very profitable. So what does my month look like? So for my Schwab brokerages, I brought in 1738, which is like a 4.4% return. So on a yearly basis, it would be almost 5%. And again, I'm going to be doing a lot more puts in my Schwab account. It's where most of the dividends are. My dividends are, and it's also, it does generate a lot of cash that I've been using for the barn dough. So I've been taking a lot of cash out of that, trying to cash flow as much of the barn dough as I can. And in the Fidelity IRA, I did 5141, which is like 1.25% on a monthly basis. So that would be almost like a 14, 15% return. And it's a much bigger account. It's like, I think it's got like 410,000, or it started with 410. And then my Fidelity Roth, which started, and it's grown the most, it started, I believe, at like 45,000. It's over 70,000 now. And this is the one I said, it's currently, if you look at it for a year, it's like 22%. Look at it since year to date, it's like 17%. Then total premium, 87.41, which is like 0.96 when you add all my accounts together, which is right around 950,000 at the time. Dividends and interest, I brought in 2710, and this is actually brought directly from my from Schwab, my brokerage accounts, looking at the statements as well as Fidelity statements. So 2710, that's that's where the added cash flow comes. In my mind, that's the truly passive income, the interest and the dividends. So total cash and earnings 11,451.64. So just almost like 11,452. And if you include the dividends and interest, it's like a 1.26%, which is about what it's grown. Right now, my retirement accounts are growing faster than my brokerage is, but I think that's going to change as I start doing more trades in my brokerage. Total portfolio value around a 911 at the time. Now it's had such a good July. It's a bit higher, and I do have some accounts I don't trade in, so it also has those that aren't included here. I may also try to trade in them too. And then daily cash earnings would be like 636, so it's pretty substantial. So the notes, 18 days of trading for the month of June. I believe there was a holiday or two, so not as many days. I think this month will be probably the same. Did really well in my Fidelity Roth, needed to trade in more accounts. So that's where I was talking about. I'm going to start doing a lot more puts in my brokerage. Definitely the wheel, like I've been running the wheel strategies. I'm going to probably do more of that within my Schwab account. 41 trades and fairly even between calls and puts. Closed more trades than opened. 3 more closed. So I think I closed 12 and opened 9. And I'm trying to do that this month. I want to keep the number of trades pretty consistent. I think I'm like open 11 and closed 9. And then I closed 2 today. So I might be even again for July. 17 call trades and 24 put trades. I typically have a little bit more put trades. 3 wheel strategies, adding a good amount to my bottom line. So yeah, the wheel strategy using not really momentum companies like Fiverr, American Airlines, Bluebird has worked out really well. And even SoFi, until it shot up through the roof, it did turn into a momentum company. STX was assigned away. So that's what I was meaning before. I'm going to let some of these deep in the money covered calls get assigned away from me so I can put the capital towards something else. Lesson learned. I'm going to be a lot more hesitant with writing covered calls. At a minimum, I'm going to do a call spread, especially on any kind of momentum company or any company that could potentially be a momentum company. So covered calls are becoming biggest issue, clipping my wings. So and I've talked about that in a number of the videos lately. So let me know what you guys think. What kind of trades are you making? What kind of strategies work the best for you? Please leave a comment. I try to respond within 24 to 48 hours. And again, thanks for taking the time to listen and watch. And I hope you have a wonderful evening.